Let's get it. Let's get it. Let's get it. Let's get it. Mic check. You guys hear me? Whoa. Mic check, mic check. I'm just gonna do a quick mic check, guys. I just need someone to confirm they can hear me.
I can hear you.
You are, who was, okay, cool, fantastic. So I am audible. Right, I'm just, let's see. I can see a couple of names that I'm expecting that are not yet here. So we're gonna wait for about 60 more seconds, then we're gonna start, if that's okay with everyone. While I set up. But good evening, welcome everybody. Yes, I am real. You were not scammed. There is going to be class. Shake my hand. My name is Leroy. Change my Siri. Welcome. My name is Leroy. Welcome to 365 Trading Academy. Alvin, nice to have you, buddy. I've been seeing your stuff everywhere.
How's it, man? How are you?
Not too bad, sir. Let me know. Are you based in South Africa?
Yeah, I'm in Joburg.
Joburg. All right. Cool, man. Cool. I mean, like
the place you're scared of.
Yeah. As long as you know. I'm not coming there. Cool. And then we've got is that Lillian? Is that correct, from Kenya?
Yes, I am.
All right. Nice to meet you, ma'am. Thank you for joining us. Fantastic. Daisy from Kenya.
I'm here.
Right. Cool. So you are from Kenya. Is that correct?
Yes.
Cool. Fantastic. And then we've got Nyasha Zashe, based in South Africa. Is that correct?
Yes. Hi.
How are you?
I'm good.
Good. Just judging from your name, you sound like you're originally from Zim, though. Is that a correct guess?
Yeah, I'm originally from Zim.
Right. Cool. Well, good to have you. Me too, by the way. Me too. How do I pronounce this one? Rahab. Nice to meet you, ma'am. You from Kenya? Am I remembering this correctly?
Yeah.
Fantastic. The brother Sanele, good to have you back, man. Okay, I don't know if Sanele can hear me.
Nice time.
Fantastic, man. We should talk one of these days. I'm gonna have to get off my sabbatical, so that means I'll be back online to like chat and all that stuff, and we'll catch up. Mr. Trevor, same, man. Good to see you guys. Cool. Right. So we're gonna start, guys, and just a quick heads up. Tonight is just an introductory course. I'm just gonna break down a couple of things. I'm going to break down how things are going to work moving forward. I'm going to break down what it is that you're going to be learning. And then if there's a little bit of time towards the end, which I know there will be, I'll then introduce a simple concept that we're going to build on. All right. Anytime you want to ask a question, it's just 10 times easier if you just type it there on the Zoom chat box. So right down there on Zoom, you just type your question. And then in between my long teachings and stuff like that, I will read it and answer it immediately, right? What I don't want is for you to completely forget your question because you're waiting towards the end, right? So just stop me. I hardly ever forget my train of thought. So questions never, ever interrupt me. So ask as many questions as you want, but just use the chat versus turning on the mics, please. All our sessions are going to be recorded. All right, so maybe let's just start with some basic home stuff, right? So some house rules. All lectures will be recorded. It's important that because when I start to get excited, which I will, you'll get to know me. Sometimes I just jump into class and we just start, and I forget to press record. So if you notice that it's not recording on your side, please feel free to remind me. Just say, Leroy, please record. Recordings in the past have been extremely useful to previous students. This is not a what is pips, how do you buy or sell, what is support and resistance type of course. You guys are about to walk through a journey of what is called institutional trading, all right? And I'm teaching you supply and demand. Now, from the jump, this has got nothing to do with whether you've traded before in the past or you've never traded before in the past. From the absolute jump, I'll start to walk you through this thing, building block by building block. If you have traded before, I would highly advise you start a slow process of unlearning. So whatever you used to do in the past, and I'll ask you one by one when we have time later on, who in the past has traded before, etc. So I just get a sense of who I have in the room. There's some of you who've traded before, there's some of you who've never traded at all, all right? And that's perfectly fine. If you have traded before, your job is to start unlearning. My stuff that I'm going to teach you for the next 8 weeks, okay? And your stuff that you've been doing for however long can't mix together. It's like water and oil, right? So you can't borrow a few tricks from your old method and try and adapt it to what I'm teaching you. It's far much more better to master what I'm teaching you and you go try it out for yourself. And then if you feel like you want to adopt it and change it, you come back to me with all that data to say, Leroy, I've tried supply and demand and it's not working. And remember, this is not a marketing advert. This is literally the only people present are either people who registered, they are people who registered and are not yet here, right? So I'm telling you this now. You have every right within the first 12 months, starting from today or yesterday, whenever you registered, which was in the last 48 hours, 12 months to come back and prove me wrong. And if you do that, you get 100% guarantee refund, right? You can see I've only done 4 intakes this year, 4. You can see how many people are in the room. Like, I don't make a living of teaching people, right? I know a lot of Forex people do that. I know they want to drum up students, class. I only have intakes when I have time, right? I'm a full-time trader. I run a trading actual corporate that deals with corporate accounts, okay? I'm doing this because I fundamentally believe if retail traders were empowered with this information, lives would change. And when I say lives, I am very specifically talking about African lives, right? So that's just kind of like my vision. Next year, we'll try and do more classes. But this year, I was really completely competing with time. All right, so you get 100% refund if you can show me that what I'm teaching you doesn't work. And you have 12 months to prove it, right? All you will do is you submit your trading account statement with your broker so that we can see where you entered and where you are stopped out. Being stopped out, if you've never traded before, it's when the markets kick you out of a trade and take your money. So every time you lose money, you most likely get stopped out. And if we can sit back together with your trading statement and you can show me that I followed the rules here, I followed the rules here, I followed the rules here, and I lost money consistently, you get your money back. All right, so I'm saying all of this to say it's important. You have nothing to lose if you can just give me your full attention for the next 8 weeks. If you can just 100% commit to what I'm saying, if you can just assume I am right until you prove me wrong, this learning journey will be much, much quicker. All right, so I've been trading for about 8 years, give or take. The first 3 were terrible. All right, I was still studying at Rhodes University at the time. And trading, I did derivatives, I did binary options, I did IQ options, and then I moved to Forex, and then I did crypto trading, and then I came back to Forex, and then I stayed at Forex for a while, and throughout that journey, I kept losing and losing, but it was progressive. I felt it was progressive. I was mastering different strategies. I've done a lot of different courses, some of them completely useless, some of them were just okay, etc. All right, but in the last 5 years of the 3 years, I've been a supply and demand trader. And that's when I had a light bulb moment because I finally did a course that actually opened my eyes to everything. If you want to do your own research of the type of pedigree, all right, pedigree of where I come from, everything that I learned in terms of supply and demand was done in 2 big institutions. First of all, I did the ITPM, Institution Traders Portfolio Management, with Antonio Krill. Antonio Krill was one of the best traders at Goldman Sachs in the United States for about 20-something years, and he started his own trading academy called ITPM. He's a successful, brilliant trader. You can look him up. You can find him anywhere. So I did his course first. I saved up for it, and I actually did that course. I use his course fundamentally for my corporate stuff. All right, so that's where I deal with the corporate accounts, right? ITM, portfolio management, is high-level stock trading assessment, right? And the corporates that we deal with, that's where they're better invested. After I did my ITPM, and you go check for yourselves how much these courses are. This is about $3,000 US, but you can just Google this and verify what I'm telling you. I did supply and demand with Online Trading Academy. And I did all 4 modules. So it cost me about $21,000 US over time. So when I tell people that this is coming at a crazy discount, I know everyone says that, so it feels like it. But I am telling you this now because most of you have already paid and you're registered. So I am telling you this now to fundamentally try to win over your mindset. I need you to take this as seriously as possible from day one. All right, you are getting this at a tiny piece. And the reason why 365 we charge very little is because I don't want to be committed to a full running academy yet, right? We were going to launch our university in 2025. And when we do that, then yes, we'll have to move to these price ranges because I will have to hire people lecturing, blah, blah, blah. We're developing our software, we're developing our bot and all that stuff. But until then, this is why the price is low. All right, so I'm hoping for an introduction that's fair and fine. My name is Leroy. I don't know what you guys know about me. I am from Zimbabwe, born in Zimbabwe, educated in South Africa. All right, so I came to University called Rhodes. I did my law degree at Rhodes University, and then I moved on to doing industrial economic sociology, right? So that does for my honors, masters, and a PhD candidate in that particular field. I am a published scholar in industrial economics, so you can just look for my articles on Google Scholar. They range from Global Left to Paracon. Paracon is called Participatory Economics, right? And this is kind of like the stuff that got me to where I am today. So my PhD thesis looks at how do we involve ordinary people with no finance knowledge, no accounting background, what we term Black working class. So generally poor people who come from countries like Zimbabwe, South Africa, Nigeria, Kenya, with high unemployment rate. So there's no jobs for them. They don't really have a particular skill set. How do we get them to become fully participatory members of an economy, right? So that's what my PhD study looks at. And if you want to read more about that, like I said, I've written a lot of articles around it, but I focus on the 1980s. Just a quick introduction. South Africa in the 1980s was going through what is called apartheid, racial segregation. So it was almost illegal for Black people to have any type of dignity. And I focus on economic dignity. How did Black people during apartheid start to revive the economy? Was there a revival of the economy? Was there a revolutionary economy that we can look at, remodel into the market space, etc.? And my answer has always been the Forex market. That's fundamentally my conclusion, and that's how I kind of like drop my PhD. If you were to teach every unemployed youth between the ages of 18 to 35, supply and demand, you gave them the type of support they needed, right? So an actual institution that monitored, mentored, sustained them, invited them back, because Forex is extremely, extremely difficult, despite what the Forex gurus say on Instagram. If you gave young people that shot for about a year to 2 years, our gross domestic product as Africa in general would extremely grow. Quality life would completely change. So that's kind of like my mission behind 365 Trading Academy. This is why I do what I do, partly for academic reasons, number one. Number two, because I do feel like I have a responsibility to do that. All right. Outside of that, I promise you, all of you guys will get to know each other. I will be adding everyone to the private student Telegram group sometime tonight. I have not done that for any of the new people. I apologize. It's been extremely busy. Actually, I've had a terrible start to the week with a lot of admin work, but what we're doing tonight is what I love to do. I fundamentally like meeting new people and kind of like just walking through them, the market, and educating them. A couple of things you need to know. Supply and demand is, generally speaking, an 80% win rate, right? So there's basic supply and demand. I'm pretty sure you can YouTube some stuff around supply and demand. Around that stuff. It's got a basic 80% win rate in the Forex market. And this is a recording. I am recording this stuff. You can use this recording against me. All right, you can use this to tarnish my reputation. 365, I'm telling you now, there's an 80% win rate. Well, I'm going to teach you about the mechanism of Forex. I'm going to talk to you about your psychology. I'm going to talk to you about your inability to follow rules. I am simply saying, as a system, without the individual's influence, without the trader's bad habits and good habits and discipline on Monday and not so disciplined on Tuesday, as a system, supply and demand has a win rate of 80%. Institutional supply and demand is what we are going to be doing. Adds a slight small layer to supply and demand, which is order blocks and order flows. And those order blocks and order flows push this win rate up to 94%. I can attest to this. Till today, I've been building my robot, right? 365 Traders robot. Before my bot, and even now, it's not yet live. We're still adding rules to it. We're teaching how to read fundamental stuff. We need 12 NFPs before that robot can actually fully have all the data I need. 12 NFPs means I have to wait for a full year because that report only comes out once a year, right? So there's a lot of stuff. But without the bot, as a trader by myself, I have experienced this, right? Literally an immaculate high win rate, number one. Number two, you can back test it for yourselves. After you finish module 1, which will last for the next 4 weeks, you will be able to back test it. I'll teach you how to back test my trading strategy, which is how you back test any trading strategy moving on for the future. In case you decide to try something else, always back test that stuff before you put your real money at it, okay? It's got a 94% win rate. What you now need to do, and what we're going to be doing from tomorrow, Wednesday, which is day 2 of our lecture, is we need to start to build a set of rules. This is where traders fail. Now, there are many trading strategies outside of supply and demand, right? There's support and resistance. Very common, very popular, simple to understand. This is a retail trader's strategy, right? It's simple, retail trader strategy. And what support and resistance does is it tracks a certain type of psychology, right? Buyer and seller psychology. And it creates an assumption. The assumption is twofold. Number one, most retail traders are looking at this level as a floor, as a support. Therefore, every time price comes down to that floor or support, we are going to buy. That's simple. Comes down, we buy. Comes down, we buy. The second part of that assumption is the more buys that happen on this support, on this floor, the stronger the area is for continuous buy. After all, it means more retail traders are looking at this area every single day of their lives with their retail account ready to also contribute to a buy. It's like the introvert version of a crypto pump. Okay, if you know what that means. If you don't know what that means, it's a market joke, so it's just not too important. The top part here is generally considered a ceiling, the resistance. So this is the resistance. This is the support. This is where if price was to arrive here, you sell. There are so many trading textbooks around this. Unfortunately, my office is now shaped this way. I can go through the books I have on my bookshelves. Public World Trading Academy, highly professional trading books that talk about support and resistance. A lot of things that a lot of retail traders never get to consider is, number two, brokers, which is where you're going to open your account, right? If you don't know what a broker is, you are going to eventually fund an account with a broker, and you're going to put some money in that account, and they are going to be the in-between between yourself and the markets. Brokers, to get their license, to get regulated because of the type of risks involved in trading, brokers are supposed to provide some type of education. Right, some type of education. And that education is for them to say, look, man, we've spoken to all our clients. All our clients know the rules of the game. They know there's high risk. They know that they can lose all the money that they fund their accounts with. And most importantly, as a broker, we've even given them a strategy to use. Now, a broker will most likely invite you to a seminar. Some seminars last 6 weeks, some are just a day. Some is just like a folder of videos, right? And in there, right, to become regulatory approved, they will hire someone with a master's, what's it called? It's with the International Federation of Technical Analysis, right? So this is IFTA. International Federation of Technical Analysis. You can look them up. I did my master's with them. So this was my first master's degree before I did my second, which was master's in industrial economic sociology at Rhodes. I did my master's at IFTA. Here, all they taught us was 367 trading strategies, Dow systems, Elliott wave, supporting resistance, moving averages, how to code them, how to adjust them. Every single thing in every single retail trader's arsenal of trading is taught in the IFTA. And a lot of those trading strategies are amazing to some degree, right? Some of them have a 30% win rate, 40% win rate, 60% win rate. My point here is brokers have to hire someone like me or someone with an IFTA qualification to run this education seminar to say, look, we've invited our clients for free. If you open an account with a broker, check the emails they'll send you. One of them will invite you to a seminar. Those free seminars are hosted by people with an IFTA qualification, walking you through these type of strategies. Now, there's nothing wrong with that. Absolutely not. And I'm not here to bash this kind of stuff. I'm here to actually let you know how this game is played. If I want to go buy a car, I like a specific type of car. I like Jaguars. So whenever I need to change my car, I only buy a Jaguar. I like Jaguars. I've been driving Jaguars for a very long time. That's what I like. My wife likes Jeeps and whatever. Cool. If I want to buy a car, if I want to buy a Jaguar, I need to go to the Jaguar plant because they're the only people who are going to sell it to me. Let's make a simpler example. If I want to go buy bread, I need to go to a bakery or a grocery store because they're the only people who are going to sell it to me. You understand? That's simple Forex. It is not just Forex. This is simple economics. It is not just simple economics. This is how price works. Not only that, but the underpinning of price, which is the underpinning of our global economics, national economics, globalization economic motions, which allow us to buy and sell stuff. All of this is underpinned by an important concept called supply and demand, which is to say, if I want to buy something, I must find a seller. And if I want to sell something, I need to find a buyer. It is simple. It's literally taking us back to feudalism. Feudalism is back in the day when there used to be kings and queens and no money, right? If you watch Game of Thrones or those weird olden day shows, that's feudalism. Feudalism was before capitalism. We are in capitalism right now. Anything to do with money, profits is capitalism. In feudalism, because there was no money, there was the barter trade. I have a cow and I want milk. Oh, I'll give you milk if you give me a goat, right? They're different ways of economic activities, barter trading. This model of pricing was moved into capitalism. The difference is there is now money, number one, and number two, the pricing or the cost of a product is around supply and demand. If we can understand this at a simple level, the fact that tomorrow some of us are going to have to go to the store to buy bread, if we can understand how we got to that conclusion, why we got to that conclusion, you will slowly but surely start to become a very good Forex trader. Now, this is me. I will walk you through a lot of talking. I will give you a lot of examples. I will repeat myself sometimes. I teach in loops, right? So this is how I lecture. Even my students at university, sometimes I contract lecture INS 2 and 3 at Rhodes. I literally teach in loops. The reason for that is fundamentally, if you're lost here, the concept will show up here, will show up here, will show up here, up until you fully get it. Along the way, once again, I'm not a pastor, I'm not a preacher. I don't want it all quiet. If there are any questions, you stop me and you ask. So once in a while, I'll ask for a room temperature check, which everyone needs to participate in. And I'll ask, are you guys okay? You just type yes, 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 or no, right, on the chat, just so I know if I've lost you or not, right? Whatever I teach you for the next 8 weeks, if you don't understand it in our Zoom classes, you will lose money in the markets. So whatever it is that you've paid, I believe the discount for this final run, it was $180 for the course. You have paid $180. Those of you who have paid, I know some of you are waiting until the 9th to pay, because some of you think maybe it's not even real. Right, so whatever you're going to pay for the course, right now, as far as I know, early bird registration is this amount. You have paid this for me to give you everything I know and understand about the markets. You need to treat this like your last goal. This is your last option. So milk every dollar of what you've paid me. Ask as many questions and get as much. I love doing this, right? I honestly enjoy doing this, but I can only meet you at your level. So I will give you everything, but if you need more out of me, ask. Please don't be shy, right? So, because whatever you get wrong here, you will pay the price there. Right, cool. So enough about, just the background of the economic history of price. What is going to happen moving forward is we're going to be having classes Tuesday to Thursday. And I'm going to ask for some flexibility. All right, it always happens. I don't know why, but it always happens. I know for week 1, this is fine. And probably for week 2, this is fine. From week 3 onwards, I might ask us to also add Monday. So you need to understand this. I might want to also just say, can you also come on Monday? So that we meet Monday, Tuesday, Wednesday, Thursday, which is 4 times a week. This will have to be based on a vote. Everyone needs to be available for that Monday, etc., so that no one is left behind unfairly. But that's generally how I've done the previous 2 intakes this year. I feel like, oh my God, there's still a lot to give, and I don't want us to rush towards the end, right? So I might ask for Mondays. Right now, Mondays are my only days off, right? I work through Tuesday up until Sunday, flat, about 16 hours a day, analyzing charts, supervising my own traders who are trading the 365 corporate hedge fund with me, or doing Academy work, right? Or it's just a lot. So Mondays for me are generally family time. But if we feel like we need, by week 2, week 3, I've broken down the foundations of supply and demand, and everyone is now on the same page with me, and it's now time to go. It's now time to build trade setups. It's now time to assess live market conditions, etc. And I feel like we might need Monday, right? I'll ask for it, and I'm hoping that you guys will be willing to give it to me so that we can really cover everything, right? Once in a while, after a module, you're more than welcome to have a Q&A session. So there might be a lecture where you say, can we just cover all the questions, right? So normally that will be towards the end of module 1. We'll do a Q&A before we move on to module 2, right? So that we make sure that everything in module 1 is understood. Now, module 1 is what we like to call mastering the basics. All right, so just 2 seconds. There's someone who's stuck outside the Zoom room. I see Colin is struggling to log in. I just want to try and see if I can admit him. Right, so module 1 is mastering the basics. And this is the longest module in the course. Module 1 is mastering the basics. It's not just the longest, it's going to go for 4 weeks. This is the most important module of the course. Right, please. The basics are the most fundamental aspects of supply and demand that I'm going to teach. The term basics is just a common term used. There is nothing basic about the course, but I'm saying this is level 1 and everything absolutely has to be mastered. Now, remember what I said about 15 minutes ago? My job for the next 8 weeks is to build rules. That's all I'm doing. You know, the title, you'll see tomorrow in the Telegram group with the private students. I disappeared for about a month, completely just radio silent on them because they've done the course and they need to talk to each other, and I needed time. I'm writing a book. My first big trading book. I've done papers, but I've been putting it all together into a book. And the title for my book, before the editors had a hissy fit around it, was called 365 Traders Manual. You know a manual? You know when you buy a car, inside a car, there'll be a manual. This is how you drive a car. Or when you buy a table, there's a manual on how to build the table. This is how my course operates. The editor thinks that's such a boring title, the book won't sell, and I really didn't care about that. But the course is designed that way. It is a manual. It is a step-by-step process on how to think through price, how to read everything that's going on, and how to build a setup. Now, I was not shocked, not anymore. I used to get so emotional a year ago, right? So I don't know if you guys know, but I also do something called 365 Traders War Room. Now, every week, if I'm free, I'll show up on Sunday and then go live. Now we go live on YouTube and I'll run through the markets, right? I have this little piece of paper to remind me of what to look for people. I'll do about 14 to 10 charts, 10 to 14 charts in a period of 2.5 hours on a Sunday night, normally every Sunday. I started this for students specifically, but it's now for free for publics. This is how we do signals. I used to be emotional about this a year ago because I would then come back on Monday. It would be my day off. So what I do on my day off is I wake up at 4 or 5 because my boy needs to go to school. I have to meditate, I have to get ready, etc. And then I'll set my pending orders. My pending orders are market orders, things I'm going to buy or sell. They were always based on the stuff I plotted for everyone in the Traders War Room on Sunday. And I'll just secretly move on with my life because I'm a set and forget trader. So what we like to do in the market is we analyze and then we set pending orders because we have this belief that we know where price is going, right? So you're going to see in module 1 is all about that. Understanding that price has a destination, a starting point, and an end point. And so my pending orders will be set by Monday. Some of them will get triggered on Wednesday, on Thursday, the following week, etc. But here's the nice part about being very consistent with the war room. I would then come back on Sunday. I mean, obviously, I've been watching my account the whole week, but I'd come back the following Sunday and do another war room. And the zones that I marked up, price has done exactly what I thought it was going to do. My war rooms have all been public. They have never been denied access for payment. They've all been completely free. And so the emotional part comes with the fact that I've noticed with myself and the comments I get that my videos are too long. The people traders want a course. They want to master the markets in 2 days. I am not that type of person. And I can't change that stuff. If I start to fiddle with how I deliver information, I know for a fact I am going to reduce the quality of that information. Our classes are going, tonight's class is going to be nice and short. The first week is always nice and short because we're just breaking down concepts. But from week 2, please be prepared to be here for the full 2 hours. All right, so from 6:30 South African time to about 8:30, all right? And I'll try to finish at 8:30. But I can't rush and then rob you. Trading is the only job in the world that carries 100% risk on you. Starting a business in a third world country in South Africa, far much more third world than South Africa, let's say Zimbabwe, Malawi, Kenya, starting a business is far less riskier in those countries than trading Forex. In Forex, one thing is sure, there is 100% guarantee you will lose everything. It is a guarantee. It is a market-given guarantee, right? The difference between you and the other trader who does not lose everything is this: rules. A lot of rules between that trader who becomes consistently profitable over time and the other trader who is consistently losing money. That is the difference. And so when I say module 1 is about mastering the basics here are rules. You're going to have to master rules, and some of them come together. right? Some of them will build a setup. We're going to talk about the rules for a buy setup after we understand market mechanisms of supply and demand. Then we're going to do the same for sales. Module 2 is slightly different. Module 2 is something I introduced after a year of teaching, right? Module 2 is my trader's edge. So my edge in the market, right? I never compete with retail traders, ever. I am never in competition with anyone who believes in support and resistance, who trades with indicators, who thinks trend lines are the only thing to use in the market, who uses Elliott waves, the Dow system, whatever retail trade. I don't look at that stuff. Those retail traders don't really exist in my peripheral. But however, as a supply and demand trader, I know I'm in constant competition with the banks. I'm in constant competition with institutional intraday traders. I am basically competing with market makers. And this is very, very important for me to understand who I'm competing with. Because if you go back to my example, because I have to tie everything that I've said so far. If I want to buy a car, somebody has to be selling. Somebody has to be on the other side of this relationship. If I want to sell an asset, someone has to be buying. In the last 60 years of financial markets, in fact, my research stops at 60, but it goes back way before that, into the Great Depression, when Goldman Sachs was the rising financial Forex company in the world to usher America out of the Great Depression, in a manner of speaking. If you go back to it, markets evolved around this: buy, sell, buy. And how it works in today's Forex market is, most of the time when retail traders are buying something, smart money is selling it. And when smart money is selling, retail traders are buying. Why? Well, smart money will always create market conditions. There will always be market conditions that are created, which allow us to see specific things. So the most dangerous thing about trading Forex is the fact that it is a perceptions game. It is a massive perceptions game. You see what you want. You can see a buy while I'm looking at a sell at the same time on the same chart. And it doesn't help that there'll be things called fundamentals that will shape how we see things. Then there are going to be things we're going to talk about later on called sentiment, market sentiment, that shape how we view things. And then lastly, the only thing that traders rely on, unfortunately, strategy, which shape how we see things. Between these 1, 2, 3 things, we are all going to make the mistake of buying when it's not time to buy, or selling when it's not time to sell, or simply trading when it's not time to trade. And what I need to do with you in the first 2 weeks is to, first of all, lay out the rules of the game. What does a buy setup look like? What does a sell setup look like? Fundamentally linked to supply or demand, right? So it's about 12:15. I just want to quickly do a temperature check. Is what I've said so far been clear? Am I clear? So you just type Y for yes or N for no. I just want to know, with the people in the Zoom room right now, am I coming across to you clear? Mr. Kakoma, good to see you, man. Who else snuck in while I started? Gift, good to see you. I was starting to get worried. Gift, good to see you. Edwin, good to see you. Good to see you. Cool. Right, temperature check, guys. Am I clear so far? Lucky, good to see you. All right, cool. All right, so everyone is saying yes. Everyone is saying yes. All right, that's fantastic. Right, so pretty much I need to fix this. Perceptions. Now, maybe tomorrow we'll find out who's traded before and who hasn't, but it really won't matter for this course. All right, it won't matter for this course because you need to be starting, ground up, essentially. You literally need to be starting. Hey, Alan, thanks for joining us. Good to see you too. All right, cool. Entered late. All right, fantastic. Not a problem for those who entered late. Okay, right. So remember, this is an introductory lecture. So tomorrow, I'm going to be talking to you about a couple of things. The first thing that you need to learn how to do is understand that there are 5 types. Let me just quickly mute Catherine there. All right, cool. All right, everyone's muted. Sorry about that, guys. Right, so number one, the first thing you need to understand is there are 5 types of supply and demand. I'm strictly talking about institutional supply and demand, the one that we are going to use. We're not going to experiment with our money. We're not going to be jumping from strategy to strategy. All right. For those of you with you know, who have problems believing, you know, I asked a junior researcher in my firm the other day just to look at social media. So join all the Forex groups, he joined a lot of them, and he sends me these hilarious screenshots all the time of just how retail traders think, right? I mean, I've been a retail trader myself, so I know, but I just wanted to see if it's still the same. Retail traders believe that you can't hold trades for more than 3 days. That's a big problem. That's a lie. Retail traders believe that everyone is making $10 or $14, and anything above $1,000 is a scam. That's also another big lie, right? If you can't do it, you can't do it. But guys, a lot of people are actually making a lot of money in the markets. And most of them are professional traders. When I say retail traders, just so we're clear, I'm talking about people like you and me, right? And I'm going to put myself in there. A retail trader is fundamentally someone who can't move the market because you don't have the capital to move the market. It costs a lot of money to create a trend. You gotta put in a whole lot of billions and billions and billions of dollars to trigger a trend. And what you do then is you create a honeybee effect, right? So check this out. And I'm going somewhere with this, so I hope you're following. You don't know yet, but let's just call this a demand. I'll explain what a demand is later on. Smart money. And I'm going to keep saying smart money, but what I mean here is banks, hedge funds, and believe it or not, insurance companies with in-house traders and private equity companies, right? Old Mutual, I worked for Alan Gray, by the way, for about 2 years as a floor trader there. Your local banks, wherever, right? These guys, these are big money movers. They have a stake in the market. When these guys buy an asset, they are buying them at gigantic volumes, right? Literally massive lots, massive capital, massive buys. When they do that, they start a trend. Retail trading strategy, and those of you who've traded before, I'm sure you've heard stuff like this. I'm sure someone told you in your trading journey, never enter without confirmation. Does anyone know about this rule? Confirmation. You need some type of confirmation to buy. You need a big candle, maybe you need a bullish engulfing candle. If you don't know what those terms mean, that's fine. I'll teach them to you. But I'm simply saying retail traders have been taught to always wait for confirmation before they place a trade. After all, how are you going to buy without confirmation? It sounds like it makes sense. But what happens is confirmation starts to arrive somewhere here or somewhere there or somewhere there or somewhere there, right? Because as a retail trader, you need to see the market move, right? The most blessed thing that came out in 1960 was the phrase, trend is your friend. And simply that's what it means. It means look at the trend. If you see it, buy with it. Trend is your friend. All right. It's called in Grahamstown, by the way. Forgive the beanie. I look like an old frail man, but it's really, really, really cold. Right. So essentially, because of that, trend is your friend. Retail traders wait for the trend. And money makers or banks, essentially, the difference is they create the trend. So they put in a large sum of money, and then our buys, as the millions and millions of retail traders, we start to fuel this trend. We allow it to continue. The problem with this term, trend is your friend, is the second part of the phrase never became popular. The full phrase is the trend is your friend until the bend, right? So old school traders will tell you this. It's your friend until the bend. And it seems to me a lot of retail traders don't know how to read the bend. Don't know when to stop jumping into a trend. Don't know the difference between buying low and buying high. And that's what we need to fix. So I'm going to tomorrow start off with the 5 types of supply and demand, right? There are 5 types of supply and demand specifically that allow us to approach the markets to avoid this. In these 5 types of supply and demands, they all interact with time frames differently. All right, so if you're new to trading and you don't know what a time frame is something like this: 1 hour, H4, daily, weekly. Each chart will have a different time frame that you choose. So you choose which time frame you want to look at to start your analysis. The 5 types of supply and demand are all equally present on every single time frame, but there is a difference. Some are more pronounced in different time frames. So for example, the first one I'm going to teach you tomorrow is called major turning points. And we only find major turning points. We find the effect of major turning points on every time frame. But we only find major turning points physically present on the chart, on the monthly chart. And this is an important chart. This is the most important chart. This is the one chart that retail traders don't go to. It's shocking. It is literally the lifeline of the Forex market. It is where you get to assess the actual trend. If you've come to any of my war rooms, I mean, I literally do my strategy in front of you all the time. I appreciate the feedback. I've gotten a lot of screenshots of people saying, thank you for this. The accounts are growing. And most of them are even students. Some of them are students, which is awesome. But a lot of people are watching my war rooms. I always start on a higher time frame because I want to understand the flow of money. I want you to forget about candlesticks. If you've traded before, forget about candlesticks. Yes, price action is important, but in module 1, forget about price action. I want you to start thinking about money. This is a $6 trillion industry. It's about money. We have to learn to follow money. Money goes where the banks are. You understand? That's why stop losses get hit. If you put a buy or a sell where the banks are, it's literally, right? It's pretty much you in the middle of a train track, right? This is literally what you're doing. Every time you bet your trade, your money, your hard-earned money, it's you trying to stop a train, right? This train is gonna knock you out. There is no broker after you, not in the way you think, right? There is no broker who has bewitched you and is always blowing your account and taking your money. You are simply buying and selling in the way of a moving trade. My job in module 1, when I say master the basics and the rules of the game, that's what we do. We fundamentally have to understand what these guys are thinking, how they operate, right? The common question that I always get is, why is my win rate so high? How is it possible? Blah, 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 blah. I only do what the banks do. If the banks are not moving, I'm not moving. If the banks are buying, I'm buying. If the banks are selling, I'm selling. If the banks haven't moved, I don't anticipate their move and go in first. I simply wait for them to move first, right? There's another mic that's unmuted. I'm just gonna quickly unmute your mic. Guys, remember, if you wanna ask any questions, just type on the Zoom chat. What I don't want is any type of interference with the audio to affect your recording. You're all gonna get a copy of your recording of every lecture. So just remember that, ne? Okay, so essentially that's what we're gonna do. So we're first gonna break down the 5 types of supply and demand. It's gonna take us about 2 weeks to do this. All right, so Wednesday, Thursday, and then the whole of next week. So most of you got my email. You should have received the schedule for module 1. All right, so the first 2 weeks, I have to break down how supply and demand works and show you how there are only 5 types, only 5 types. After that, we're gonna do what is called multiple time frame analysis. Now, this is what we call the golden thread approach. We need to start to track how money flows through these supplies and demands, where to wait, where to move, etc. Right? So we do it through a clean MTA. That's going to take another 2 weeks to grasp and just to soak in. But every lecture will be geared towards getting you there. Once you learn one type of supply and demand, we're going to build in the second one. Once you learn the second one, you start to see your charts change and move, etc. And that process will continue up until the end of module 1. We'll talk about risk assessment. We'll talk about how to correctly lot size. We'll talk about leveraging. We'll talk about brokers and which books they put you in and why they push in that. We'll talk about the algorithms that brokers use to profile your trading. Okay, all that stuff will come in module 1, but the fundamental key components of this course is to understand the rules of the game. In understanding the 5 types of supply and demand, there are a lot of things that we do as 365. We use areas of value. We never have support and resistance lines. We have zones for a reason. We use our areas of value to allocate order blocks. So you're going to learn about order blocks. Not only that, we're going to talk about order flows. Remember, like I said, forget about everything else, focus on the money. When I'm buying at a specific area of value on a chart, I am simply looking to say, look, I am buying because I believe that there's a lot of money here that was left by the banks, and the banks haven't used up this money. Because of that, there's an 80% chance that the banks are going to come back and buy with me. Essentially, that is it. It's probability trading. I'm taking a strong bet on the fact that, according to my analysis, the money that was left here has not been used. These guys are all about profits. They won't just leave $5 billion US on Euro USD untouched as an unfilled order. You know what an unfilled order is? An unfilled order is like a pending order. It's you telling your broker, when price gets to this level, buy or sell. But until price gets there, that order is unfilled. So what I'm going to teach you is to help you locate unfilled banking orders on the charts. Because those unfilled orders have real money, serious, not $100, not $10,000. Yesterday, I got into a stupid argument with someone who thinks $1,000 US is a lot of money. Like they're talking about, I make a lot of money, I bring $1,000 US, and I wasted 20 minutes of my time. When we're talking about banks, guys, we're talking about massive volumes of money, right? We need to track places where they've left money, but they have not yet drained that area of money. So that's what we're going to be doing with each and every single supply and demand that you're going to learn. 5 types, 5 demands, 5 supplies. There are only 5 types, and all of them carry or are impregnated with order flows, right? And we're simply going to do that. For the most part, module 1 should take about 4 weeks, including today's lecture. Generally speaking, it takes about 4 weeks plus 1 full day of Q&A. So there'll be a special lecture if you guys want of question and answers, right? So and then we need to make sure everything is polished. After that, we can then jump into module 2, where I teach you my trader's edge, how I compete with the banks. Would it be easier to follow because you've mastered the basics? Now, here's what I'm going to do. For now, we're going to say we're going to meet 3 times a week. At the end of every week, I'm going to put together a PDF summary of what I taught, right? So classes are Tuesday to Thursday. By Friday night / early Saturday morning, just depending on the kind of life I have at that time, all right, you will get a very short PDF from me. It's some of them are like 5 pages, especially the first 2 weeks, because there's not much done yet. The most might be 12 to 15 pages, but they'll have charts in there, etc. They will reflect on what I believe were the most important things I said during that 1 week. Please try your best not to come to class before reading it, right? If you don't read it, still come to class. But I'm saying you will have a better start to the week if you spend time reading those PDFs. Your life is about to change. You are telling me, if you join my course, you're saying, look, Leroy, I might want to do it part-time, but maybe eventually I want to be a full-time trader. And if that's what you're telling me by joining this course, your life is about to change. Your habits need to change. All right. We're not fly by night. We have stuck to one thing because it's the only thing that works. By the way, we've got 108 6-figure traders in the Academy right now. In the senior training program, and about 34 students who might make it into 6 figures by the end of the year. This group of people, I call them my senior traders. They've been with me for a little bit longer. And the senior trader program, you don't pay for it, but you have to pass the assessment. The assessment is simple. You take the information that I've given you and you go trade. And if you can start off with anywhere between 100 to 1,000 US dollars, or the percentage equation of this. So some people might have a lot of capital and start off with 2,000. Well, that's fine. They're just going to have to 10x it, right? They're going to have to 10x their account. So that means if you start off with 2,000, you have to create 20,000 US dollars. If you can create 20,000 US dollars or move your account from 100 to 1,000, right? Starting capital and create 10,000 US dollars, you enter the senior traders program. It's that simple. But the rules are you have to submit to me your broker's statement. I need to see that you didn't make 10,000 US dollars because it was NFP and you put a big lot size on NASDAQ and you became your 10,000 US dollars overnight. Because a trader like that will lose all that money next week. A trader like that there is nothing cool about over risking your account and blowing it. You won't see me clapping hands for that. In fact, I have tried my best to show you that with my own accounts. You can grow your accounts with risk management. You can grow your accounts with 0.01. You can. You can. I've done it many times. Many people have done it. Many people have started with nothing but 200 US dollars on their accounts, and they had me as a mentor. And I told them 5%. It's the 5% rule. Can't break the 5% rule, because if you're wrong, you lose less. But if you're right, you grow gradually. And so to become a senior trader at 365, no fees. You just need to show me that you've used the rules to grow, because to grow an account to 10K with capital between 100 to 1,000 US dollars, which is to 10x your account with my rules, means you've been through it. You have gone through a journey, and what we like to call the traders process. And basically, senior traders is just a mastermind group of likely traders. We kind of like do projects together. You know, people pull funds from the senior traders program. There are 6 trading registered proprietary firms in Africa right now, based on that. 6. That's why I never teach in November and December, because I have to travel to each trading firm to do training there. Like it starts off with being put into a private Telegram group. You meet like-minded people. You realize there are 40 people from Kenya, 20 people from South Africa. You start to collaborate, share charts, talk to each other, grow accounts. Eventually, some people choose to work with other people. We've got 6 registered trading corporate firms from there. I'm not invested in any of them. I don't buy shares, nothing. It's like literally just students who got their stuff together, followed the process, and now they're running their own firms. But it started with the 8-week course and then the journey. This is your life. This is your mission after you do my course. And I'm telling you now, this is very possible. But it has to be rule-based. Why do I want the broker statement? I didn't know you're following the rules. I never really create Forex traders. It normally starts off with creating Forex traders. My overall mission is to create equitable, integrity-filled fund managers. Africa doesn't have that. You know, the big giants are dying, right? There's Old Mutual, which is perpetually always at a loss and makes up most of its millions from clients through things like unit trust and all this rubbish, right? And yeah, sure, sue me, whatever. And there are a lot of firms like that. Sasol, if you research them, the oil company, they hedge through markets. If you research another financial company, Sailor, to find out where the majority of their money comes from, it comes from clients, walk-in clients, policies, right? Even professional financial companies struggle in the markets. Wall Street in New York, most of those big traders have a 40 to 50 to 60% win rate. It's not easy. What you guys are embarking on a journey is not easy, but it is fundamentally very possible. But you gotta have to be a rule-based person. Right, so let's end this now. We're talking about your life. Your life is about to change. Your weekends need to change. You'll never be a profitable trader if you're not disciplined. There is no magic. I will never trade your account. Please, guys, please spread the word every day. Just post it on your personal page. Number 1, 365 Trading Academy does not trade for individuals. I don't want anyone's money. I do not trade for people. If you're a company, we will trade for you. You have to be a registered company, number one. Number two, you must have a strong social cooperative responsibility factor. That's why we like to work with NGOs. NGOs are always looking for money, but NGOs have a strong impact on our society. They're either taking care of children or fixing this or trying to help old people. And we love that. And so we'll trade for them. We'll take their little funds and make them into big funds because we support those projects. But if you're a finance company and you want us to trade for you, you need to meet a long list of criteria. Number one. Number two, I am maxed out with corporate accounts. I am not taking in any new corporate accounts until March of 2022. And even then, I will choose which ones because I can only handle 30 corporate accounts. Next year might be different because some of the people I've been mentoring in the company might start to run their own portfolios. But until then, and if it's just me, I don't want. So if you see anyone saying Leroy is trading for me, please let me know and also correct it. We don't trade for individuals. We are licensed to for companies, but we don't. Individuals must empower themselves. The only way to get scammed in Bitcoin, Forex, in whatever, is to be stupid enough to give someone your hard-earned money. All right? Scammers are a problem, but your ability to dream so fast and be in such a rush for easy money is a bigger part of that problem. My 8-week course will equip you enough to get this done yourself. I guarantee it, right? We've done this way too many times now. In fact, the first time I made a 6-figure trader, I went crazy. Then we made 10, and then we made 20, and then we did a conference around in 2018 because it was like 26-figure traders. Now we're at 108, proof of concept. We're done celebrating. Our stuff works. It will work for you too, but your life needs to change. I've been trading for 8 years, running a successful trading company, but still, I put in 8 hours every weekend of chart analysis. Me. I still back test the same trading strategy I'm about to teach you. Me. Literally back test it. I put the 8 hours in on a Saturday, and on Sunday, I do another rundown of charts. There is no ways such hard work would lead to vain. Your lives, please start slowly carving out time. So here's the best way to learn with me. I teach you 3 times a week. And then I send you a PDF on Friday or Saturday. Use the weekend to go back to the charts. For week 1, Leroy taught me major turning points this week. Do I understand that stuff? Go draw the major turning points in your charts on Saturday, Sunday. Next week, Monday, week number 2, when I'm now telling you about 365 candles, a whole new concept, a whole new order block, make sure that week 1 is mastered. Master the basics. You skip week 1 and you skip week 2. By the time we get to complicated 365 candles, which is in week 3, there's going to be information overload and you're going to start to panic because now you're going to be trying to catch up with class and your personal lives and this and that. It won't work. And so you're going to lie to yourself. A lot of people do this. You're going to tell yourself, it's okay. I will watch the recordings and catch up, which I know some people do. The problem is the recordings are 2 hours. Some of them might be 2.5 hours because the recordings will be our lectures and our lectures will be from 6:30 to 8:30, right? And you are going to not want, there's something, I don't know what's up with the human mind. It wants money, but it won't want to work for that money. You're going to start to think, man, do I really want to sit through that entire lecture again? So my humble piece of advice, do it right the first time. Attend class all the time. I will show up most of the time, all the time. If I have a personal problem, I'll let you know and I'll make up for that class. I always do, right? But I'm going to give you guys 100% of me. It is, I want my final intake for year 2021 to be a good one. I really do. And so you will get the best version of me. but the best version of you will come in manageable stages. Master the weekend. Master yourselves. If you're not disciplined, you're going to have to start working for it now. And let me just give you a tip. No trading for the next 8 weeks. Don't trade. Whatever I teach you in week 1, don't forget that I'm going to complicate it in week 2. And those of you who've done the course before, you can warn them right now. When we do module 2, which is my trader's edge, there'll be some things in institutional trading in module 1 that I'm going to tell you, don't do them. I've taught them to you so you know how the market is going to react. But for a retail trader with a small account, it won't work for you. Instead, here's module 2. These are the only 2 buys and the only 2 sells I do. That's how module 2 operates. So wait till you get the full packet of knowledge before you start to trade in between the course, because there are some times where I'll give you the first set of rules and we should continue next week. Just wait for it. Number 2, plan. You want to trade, you will need capital. So start to put away money. The more you have in your capital, the better you are at negotiating which charts you can take. This, I've seen it, it's crazy. Traders, you see on Facebook, I have $10. What can I buy or sell? Nothing. Buy nothing. Sell, withdraw that money and go buy yourself chips. You're wasting time in the market. My professional brokers that I'll recommend, a minimum is $100 US. That's a minimum. There are some brokers that have increased their minimum to be more than what I'm charging for the course. You know, when I started to track traders, retail trading, once upon a time in the early 2000s, to start a retail account, you needed to have $10,000 US with a broker. You could not start trading without 10,000. That's about 14,000 rands if you're in South Africa to start an account. Because trading is a rich man's game. It's someone who wants to generate a lot of short, quick-term profits, and quick-term here could be a year, so as to start a long-term process of investing. That's what you see in the remote course. I give you a breakdown of how this whole entire industry starts for retail traders. It was never meant for us, trying to like pay bills and all that kind of stuff. So please start to save so that after 8 weeks, which is 2 months, you have sizable capital. What do I think is good for you? Like I say, anywhere between 100 to 1,000 US dollars. You don't want to put too much in there because you're going to get too confident and use the wrong lot sizes. We'll talk about that later. But if you can start off with 200 US dollars, that's good. It gives you room to breathe. I'll show you what I mean. By week 3, week 4, we're not doing how to grow a small account. You will understand why. 200, 250, 300 US dollars. These are all perfect amounts. Now, if you struggle to raise this overnight, you've got 8 weeks to save for it. Don't trade during the course. Start to save for your capital, right? Because you're going to need something to grow. All right, guys, are there any questions so far in terms of what I've said? Temperature check. You guys happy? Does it feel like I'm shouting at you and your little kids? I hope not. Most of you who are new, you don't know me yet. I am very passionate, right? So I come out quite animated and stuff like that. I am intrinsically linked to your success. My baby, which is 365 Trading Academy, is now your baby. Our reputation is now your reputation. You have such a serious, strong responsibility. All right, there's a reason why I don't do intakes a lot of the times, unlike other people who are always looking for students. I don't. We shut down for 2-3 months and we just run it via the remote course. Live intakes have always been about 3 times a year. The reason for that is I want a small group. We create diamonds under pressure. We create quality, and then we see growth. All right. That's why I take time. Even releasing my modules, I take time. Fantastic. Okay, thank you. Thank you so much, Alvin. Thank you for the feedback, man. Okay, right. So the last thing then we should do probably is just to give you guys a simple concept of supply and demand, so that you don't say in the first lecture, all he did was just shout at us. I'm not shouting at anyone. I suspect it might come across that way. So I just want to just give you like a very like, a slight introduction of what you're going to be looking at in the charts and really how to change it. If you don't have a trading view account, please let me know in the chat. Just write your name and don't have trading view. Trading view is a free, okay, well, you can pay for it, but I would suggest you use the free version of trading view to do your analysis. So I'm going to be working a lot on my trading view and on one of my live accounts with you. So you can also see what a live account looks like. I've been running a series, by the way, on our YouTube channel, how to 2x, 5x, 10x your trading account. I started the account with about $6,000 US. And the last time you guys saw an episode on it, I think we did like 12,045 from Euro USD. It's a live account. This is apparently not possible with retail traders. All right, so I'll show you how to do all that kind of stuff. But if you don't have trading view, if you say, look, I don't know what trading view is, I need to know, so I can send you a link so you can register. Okay, for trading view, it's for free, but let me show you quickly what trading view is. Let's go to screen 3 for a second, right? So this is screen 3. Right, you see this platform here where I do my analysis. It's got all the currencies, all the crypto, all the stocks, etc., etc. If you can't see screen 3, do let me know. This was a trade I gave on War Room that no one, I'm pretty sure a lot of people didn't take. And a lot of retail traders today think AUD USD is moving down because of the interest rate. There was an interest rate announcement, but this was literally, I wrote this about 2 weeks ago. I say there's a weekly supply line of competition. This is where price is going to stop. There's a daily fib here. Price arrived and dropped. I'll teach you all this stuff, but I'm just simply saying, I wonder how many people are taking our stuff seriously. Even within the academy, don't get comfortable. There's very few things I'll ever say that are not important. Almost everything I say is important for your own growth. Please, if I give you a signal, go see the before and after. Keep a record of what this guy is saying. He said, buy Euro USD here. After a week, I came back. Oh, okay. Did it work? Did it not work? You've got 8 weeks. You've got 8 weeks where you're in class, but you're not trading. But I've got 8 war rooms. I'll be doing war rooms for the next 8 weeks on Sundays, right? Because I'm stuck now. So you've got like 2 months to literally track every single trade that I take, that I give out. This is so vital. It's going to help you build confidence, which is a big key part of your trading psychology. We'll talk about trading psychology later on. You can't take a single trade that you generate from your own analysis if you don't believe in your analysis. You don't believe in your analysis because of some lighting complexion skin guy on Zoom. You believe in your analysis because you've seen it play out 1,000 times on the charts. You have 8 weeks to track every single trade I make. Every single public trade I'll put on the public Telegram group, on my social media, on the war rooms. Track just write them down. Euro USD entry, stop loss, take profit. And then just wait a week before week 2, before week 3. Always go back. This week he said, buy this, sell this, sell. So he's going to do it. What happened? Track the win rate. See it for yourselves. Because if I can do it and I teach you how to do it, it means you can do it. Simple. Right, but anyways, this is TradeView, ladies and gentlemen. If you don't know what this is, let me know. Right, you need to. I've got a pro account, yes, but you don't need a pro account. You don't need to pay TradeView anything right now, right? I can simply send you a link for the free version, the free account, so that we are able to be on the same page when we're analyzing charts. I'll need to know that. Either WhatsApp me if you have my number, or Telegram, or email me. Just let me know if you don't know what Telegram is, and I'll send you, TradeView is, and I'll send you a link. All right. But essentially, we are going to be working a lot on this platform before we move into our broker trading platforms, because there's a slight difference, right, in the codes, in the pricing codes. But yeah, to end off tonight's introductory lecture, supply and demand. Let's quickly just give a sneak preview. Supply at the top, demand at the bottom. All right. And I'm going to give the actual real definitions of all of this stuff tomorrow. All right, when we are together tomorrow, I'll then start to break them down, and then we can isolate them and really deal with them thoroughly. But But for tonight's basic simulation, supply is where we sell. Supply is where we sell. We want to sell at supplies. We're never going to sell at a resistance. We're never going to sell because our indicator is telling us that price has now been overbought. We're never going to sell because of moving averages. We're never going to sell because of MACDs. We're never going to sell because of whatever Forex bot, robot.com, whatever that nonsense is. We are simply selling. When you never sell because Leroy told you to sell. You are selling because price has arrived at a supply. What is a supply? A supply is an area of value where supply exceeds demand, where there is more supply than demand. Now, there is something called black gold in the world. Black gold is phenomenally in trouble a little bit with Biden as president, but technically speaking, won't go anywhere. When I say black gold, I'm talking about oil. Oil is one of the best commodities in the world to use as an example for supply and demand. Supply is where we sell. Don't forget that. Oil is sold in barrels. I don't know if you guys know this. They literally measure and coat oil in barrels. The barrels are actually quite black. So they go drill under the sea, in the ground, blah, blah, blah. And then they pour the oil into a barrel. And then they say, the price of oil today, actually, let's go to the charts. Let's go find out how much oil is going today. You know, there's a video we put up on YouTube where a previous 365 trader, was it Sheila or Nancy, in my last intake, they literally read oil before it went up, broke the supply and dropped down. And they were like halfway through the course, and they were absolutely right. You will be able to read these charts. That I can guarantee you. That's my mission. Right, so the price of oil today per barrel, look at this, look at my notes. Old notes still there. Price is gonna drop here and then go up. Price then came, dropped there, and now it's going back up. Right, I just wanna clear this mess so that you can see this clearly. Sometimes I'll say I'm sharing my screen. Can you see the charts? And if you can't see them, you must tell me because it means I forgot to share. I am notorious for forgetting to share the screen. So please communicate with me and tell me I'm forgetting to share the screen. Right, so let's just go to a better time frame. Right, so we knew this was going to happen. We're tracking CAD. We're tracking how price is going to, break through this level. It doesn't look broken, but we know that it is. Fundamentally, if you zoom in, you will see it. But maybe I'll teach on this maybe tomorrow. But if I perfectly align my area of value to here, this thing broke somewhere up there. Crude oil broke somewhere up there. If you zoom in, I know there's a break. Where's the break now? Why is it playing down? There you go. I don't know if you guys can see it. It's quite clear on my chart. If I can keep extending, you see that? Clean break. Right, so supply is gone. But I'll explain all of that stuff when I lecture it. But today, for just asking today, what is the price of oil per barrel today? You simply go to your daily time frame, any time frame really, and check the price. So price is somewhere. It's about $68.29 per barrel. All right, so let's go back to the whiteboard. I'm just going to call it $68. Price of oil today per barrel is $68. So it's 68 bucks per barrel, right? Per barrel, $68. Now, how oil works is quite simple. They are all tycoons, Arab, Russia, Canada in a weird way, United States in a weird way, but the actual oil tycoons. And these guys, the price of oil is not really based. I mean, as a Marxist, yes, you could say the price of oil is based on labor. The labor that is put into digging the oil and the cost of production and the factory and blah, blah, blah. We can get all economical about it. And I would agree with you, right, fundamentally. But in the market, the price of oil is simply determined by oil tycoons who decide on pricing. And how they decide on pricing is if they want the price of oil to go up, which they do, their target is $100 per barrel. If you want the price of oil to go up, all you have to do is to restrict the supply, right? So these oil tycoons have these big meetings that are filmed, or they go live on Bloomberg every month or every 2 months. And these oil guys are negotiating who is going to cut supply. Cut supply means stop producing oil. Why? They want to create an artificial sense of scarcity, that there is less oil in the markets. I want you to understand it from this example. They will restrict oil, cut the production. So let's say Russia makes 10,000 barrels a day of oil, right? And some Arab country, I don't know, makes 20,000 barrels of oil per day. At the meeting, Russia will say, I will start to make 6,000 barrels of oil, restricting supply. So I'm not going to supply the market with a lot of oil. I'm actually going to cut back. Then Arab will be like, okay, if you do that, then that's good. Me and you are friends. We will cut back to 15,000 15,000 barrels per day, right? So they're cutting back. If they do this, if there's ever a restriction of supply, demand goes up. And that's how the price of oil will move from 68 to 70 to 80, etc., etc. Because fundamentally, when you start to restrict anything, you make it scarce, you make it available, valuable, and all of a sudden, a lot of people want it, and all of a sudden, you can start to charge a lot. Please send TradeView link. Please private on Zoom, just private message me your email address, because I'm not recognizing the name you're using on Zoom. So just send me your email address, please, and I'll send it to you. All right, so you guys understand this. If I restrict oil, demand goes up, right? So let's use a much more simpler example. Let's go back to the cars. I stay in a small town called Grahamstown. Grahamstown is a very tiny town. We are a university town, but we are surrounded by big towns. Now, let's say in my small town, everyone gets retired, everyone retires a millionaire, but I'm the only one with a Jaguar car plant. So I am the only Jaguar car provider in Grahamstown, but I only have 10 cars left in my warehouse. Only 10 cars left. One car is going for $1, right? One car is going for $1, but I've got 10 cars left. The problem is, in my small town, all of them are teachers and what, and doctors, and they're all retiring at the same time. So I've got 100 people retiring who are going to claim their pension, and they all want to drive the latest luxury Jaguar. Look at this. I got 100 people who want to drive my cars, but I only got 10 cars. I have more customers than I have cars, which means my supply for cars is very restricted and my demand is wild. So what am I going to do as a dirty, disgusting capitalist? Because that's what capitalists do every day with the price of bread, with fuel, with electricity, with your water. This is how politicians and white monopoly or monopoly capitalists run economies. They start to restrict stuff by making it more expensive. It's a whole game. But essentially, 100 people want my car. I got 10 cars. It's quite simple. I can now say, look, guys, my cars are now $3. And out of 100 people, 10 might say, this guy is trying to rob us. Why did he just randomly increase the car? But I'm almost guaranteed 90 still want the car. And out of the 90, maybe the first 5 buy the cars at $3. So now there are 85 people without cars but want the cars. But I only have 5 cars left. What can I do with my pricing? Because my supply is restricted, but my market is so big, I have a monopoly here. I can say, look, these are the last cars I have at the dealership. They're each going to sell for $15. Whoever wants can take. I'm not begging for customers because I've got 85 potential buyers, and there is no other Jaguar market in our example here. And so essentially, when you restrict supply, you can use, based on the allocated demand, price will start to go up. You start to make a lot of money. That's how oil works. But guys, real quick, this is how the Forex market, stocks market, crypto markets, when Bitcoin restricts, when Bitcoin goes to halving, when Ethereum goes to version 2.3 or something like that, and they enter a restriction code. We're going to only make a restricted amount of tokens. That thing is scarcity. Supply and demand is the basic rule of the game. It is not complicated to understand. It is very simple to read on the charts over time. And that's what the whole 8-week course is about. Your job as a Forex trader is to always understand the relationship between supply and demand on any chart. Stocks, I'm there. Crypto, Forex, it doesn't matter. Options, the derivatives, volatility, 75, whatever it is, your job is to understand that there is a correlation between a level called supply and a level called demand. I'm not teaching tonight, it's just an introduction. I'm saying this is what you're going to have to master, number one. Number two, the thing you're going to have to put together is where is price? Where is price in relation to your supply or demand? The key question to always answer is number one, where is price? Number two, where is price going? I've said so much already for introduction. Where is price going? Now, if you ask anyone that I've ever taught, the first thing I'm going to have to drill into from tomorrow is this rubbish. It's a retail trader rubbish thing that is gone viral. Number one, markets are not random. Anyone who tells you that markets are random, they live a random life. They don't know what they're doing. Because you don't know what you're doing, it feels random. Because you bought and your stop loss got hit, it was random for you because you thought it was a buy. I understand that. Markets are not random. Markets are ridiculously planned. God. If you go through the economic calendar, you're going to see stuff like this FOMC meeting. You're going to see this BOJ meeting. You're going to see this Bank of England meeting. You're going to see Reserve Bank of AUD meeting. These are routine statements based on the plan of the central bank of every single country. Every single country has a central bank. Right? In South Africa, where I am based, it's called the Reserve Bank of South Africa. All right? Zimbabwe likes to believe they have a central bank where I come from, but in Zimbabwe, it's just leprechauns and witches there in power. All right? And there's no real central bank. But any functioning economy has a central bank. Inside the central bank is the Reserve Bank governor. And these guys call themselves different names. For example, in America, the central bank is called the Fed, and the committee around is called the FOMC, all right? And that guy is Jerome Powell. These reserve banks and the governors that run them are powerful people. In America, the position of FOMC Fed, Jerome Powell, is a 14-year position, which means it doesn't matter who is president. The economic system of the market for the dollar, which if you think about it, is the global financial economic system for every market across the world, has a plan. It supersedes whether it's Obama, Trump, or Biden. It doesn't matter. Powell was the Fed for all three previous American presidents, and he's trying to run again for another long term. Because how you ordain your country's economic finances predicts how long it will last in the game. That's the power of Forex that retail traders are so lost to. So what we do in our course is to first of all deal with this. It's not random, it's planned. And I am going to teach you how to read the plan. Now, it's hard to believe now, especially if you're in trading, you're like, what's this guy talking about? I'll tell you this, banks think in 3 months. They have a 3 months perspective of the market. You were taught to, it's called financial quarters. That's what you were taught. Or maybe you were even taught that. But four financial quarters in a year, and then 3 month spans. Banks generally have 1 year take profit targets. 1 year take profit targets. Retail traders can't hold price for a day. They're scared. They literally are so scared of going to sleep with trades running because they are doing random stuff in the markets. Banks take profits annually. partial profits. The last thing about banks, and we need to know this about banks because we're going to have to start learning how they move in the markets, is banks have a 10-year plan. I will show you all of this tomorrow on the charts with your own eyes. You will see markets from a different perspective, but you must understand this. This is who we are competing with. This is who we want to become like. This is who we want to mimic. We want to trade when they trade in the direction that they trade in their 3-month perspective, in their 1-year take profit plan, in their overall 10-year plan for each pair. Whether we hold for 4 hours or 10 days, that's not the case. The case is we better be in the right side of the trade because there's absolutely nothing random in markets. Nothing. Because it's not random, traders, and that is the gift here. Because it's not random, through supply and demand, we can start to answer these questions. Where is price now? Well, look, price is here right now. Okay, this is where price is today. Let's say this is the chart of oil. Oil is at $68 per barrel today. All right, interesting. Let's add the last question here real quick. Question 1 is where is price? We've identified where price is. Question 2 is where is price coming from? And question 3 is where is price going? Well, if you look at the chart based on the little that you know from what I've taught you so far in the introductory lecture, price is coming from a demand. If price is coming from a demand, Tesla stock, Apple stock, Forex chart, crypto chart, options chart, if price is leaving or coming from a demand, after I teach you how to identify a demand, I can tell you now, as sure as I know my name, price is heading to a supply. We know where price is going. And it's almost blasphemous for a retail trader to say they know where price is going. I can almost guarantee that we can find a supply where price will stop, pause, turn, or break. We understand this about price. It will differ from time frame to time frame. It will differ from what type of a supply is it. Remember, I said there are 5 types of supplies and demands. All those questions we'll deal with in module 1. But for sure, we understand that on this chart in front of us, this is a buy trade. Which means once you identify a buy trade, I want to see no selling. Unless if you're a scalper and you have no regard for sanity and you're just crazy, then sure. But you need to start to get this simple mechanism going. You do what the banks do, you don't oppose the banks. Every time you oppose the banks, remember, you're like the crazy person trying to stop a moving train. Let me put it differently. Your $200 account cannot change the direction of $2 trillion moving. Your $200 is going to be swallowed by this 2 billion, 2 trillion, 2 million. It's too little. Our accounts are too little. My biggest account that I'm willing to share on public is too little. It's nothing. It's a speck in the market. And so we don't compete against these guys. We compete against them for entries, but we never compete against them in direction. We do what they do. Guys, my intro lectures are all right, fantastic. I got the email. I got the email to the person who sent it. Please just let me know. Yeah, okay, fine. I'll drop you an email tonight. This is for those who need the trade view link. Guys, my introductory lectures are normally an hour. It's already 8 p.m. I just really wanted to introduce myself once again so that those of you who've already registered, your hearts are settled. You know that it's really me. I am not running away. I'm not hiding. No, it is real, blah, blah, blah. We have a lot of work to do. The last thing I'll say is fundamentally, if I am providing mentorship, there are some traits that you're going to have to get from me. All right. I am where I am today because of 3 things in the Forex market. 3 things. Number 1, I had a really good father. My father was present. You know, I know that's now like a weird thing in our communities. It's sad. But not only that, my father threw books at me more than he ever threw toys. right? I got more books than toys throughout my life. For my 16th birthday, I got a bunch of books. My 21st birthday, he bought me fundamental good books on financing and life and how to speak to win and all sorts of things. My father really made sure I understood that to know something is to go seek the knowledge, get the understanding and apply it, right? So those are my father's rules growing up, right? So that's number one. Number two, I am to where I am today because of my beautiful partner. She's literally been the foundation of everything that I am, right? When I was blowing accounts, once upon a time, we woke up to a massive debt of 36,000 US dollars that I had lost, burnt, destroyed, blow it. I never had it all in one chunk. It was losing $100 here, losing 500 there, losing 1,000, sold my motorbike to try and go trade again, bought another one, sold it, etc. Lost our home, blah, 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 blah. She was rock solid with me from the jump and made sure I don't give up on my dream. But this is what it cost me to get here. Outside of the courses, outside of the education, this is fundamentally money that I've lost with my own hands. 20 doesn't matter. I'm telling you, because of her, I never allowed this to drown me out. Your losses in Forex market will impact your trading psychology, which will impact your actual confidence. If your psychosis knows you're a loser, you're going to keep losing because you keep doing the same thing. You need to address that head first, right? I'll help you, but I'm saying I want you to be very, in fact, I just did a beautiful video with someone who was not a 365 student, etc., who wanted me to just look over his account, and he gave me permission to share it with everyone else on YouTube, right? And we spoke about a lot of these things around trading psychology, so you can go have a look at that video if you like. But this is important. So I'm gonna write here, she literally was the best thing that ever happened to me, right? She's the mother of my two beautiful kids. And then number three, finally, books. So my father introduced the books, and then me who took the books seriously. If I'm going to mentor you, there's going to be a lot of education that you're going to have to take seriously. I don't know how to teach this thing any other way than I'm going to do it. It's a structured course. I'm going to show up 8 weeks, but I expect you to start to develop a nature, a love for what it is. This thing can pay you, but it only pays people who are deserving of it. It's like eventually, if you really like a person, you're gonna have to date them, spoil them, and communicate that love, right? So they know they can take you seriously for marriage. That's how the Forex market is. It won't pay you until it knows you're fully committed. It's an 8-week course. If you see the stuff I do on YouTube and you watch the stuff I do on our course, you will realize a lot of the times I'm speaking different things because there's just so much information inside my head to give to you. It's 8 years. Now, what I like to do with newcomers or people starting is I like to do a game called Book of the Month. I can't force you to read it. I know that if you do, you will become better over time, but I can't force you to read it. And if you don't have a reading culture like me, if reading is not your thing and you like to listen to things better, I understand all of that. So this is what I'm begging you to do. If you're a registered 365 student or you're going to register, this is how I need you to do this thing. The book of the month is simple. 1 chapter a day. If you've never finished a book in your life, 1 chapter a day is all you need to do and you'll finish the book. Chapters in the last 10 years, 5 years roughly, books now are a little bit shorter. Books used to go up to like 400 pages. If you read Harry Potter, Lord of the Rings, those are like 800-page books. Now, publishing companies know that consumers want shorter books. So books are about 200 pages. And each chapter is anywhere between 18 to 20 pages, right? At the reading level of a grade 6 child, that should take you about 45 minutes to an hour. You have to make time for that in your life. Don't read random books. I will provide the book of the month for you. It's in line with our course. It's in line with what we're doing. But the book for the month for September, for those of you who have registered for September, is Mark Douglas's book titled Disciplined Trader. I'm teaching you how to read structure. I'm teaching you about the charts. He is going to be talking to your mind as you're following my course day by day. By the time you come to my module 4, which is around trading psychology, right? Which I'll announce and release when I feel like I'm ready to. Mark Douglas would have created a perfect setting. You are nothing without good trading psychology in the markets. 90% of what you're going to do is based on here. It's not just based on here, it's based on your perception of money. Some of you are here to trade because you're behind on bills. Your rent is past due for 3 months, and you're here to find something where you can flip $100 to 2,000 and then make that 20,000. And then before you know it, you think you're going to become a millionaire. Yeah, it's going to be tough if that's your mindset. Some of you are here because of black tax pressure. You gotta provide. And I understand all these things. I've been different versions of you in different stages of my life. But if your mindset is linking the Forex market to your problems, your trading will be impacted. She is the beautiful Virgin Mary. That's what the markets are. You don't touch her. You don't touch her until you've earned her respect. That one day, without you even knowing, she will be pregnant with your future. Does that example make sense? You don't go to the markets to extract solutions to your problems. You will lose money. You don't lose money to your broker. When your account blows, it's not like your broker is getting richer. Your broker makes money when you buy, when you sell, when you win, when you lose. Your broker doesn't care about your lifestyle. But every time you lose you lose your account or you blow an account, I want you to know you've just experienced what is called the transference of wealth. Your money literally went into the account of a better trader, a disciplined trader, a rule-based trader, someone who knows what they're doing. If you blow an account, whatever you blew, Euro USD buy, someone who sold knew better than you. You need to become that better trader. That's your goal for the next 8 weeks. That's going to be your first goal for the first 6 months in my course. I don't know if this was communicated to you, by the way. After 8 weeks of the course, you're going to get 365 days of mentorship. And that is simply a Bother Leroy free card. One-on-ones. I review your trades with you. I look at your statements. If you want, I can't force you. I don't have time to do it. I offer it because it's the right thing to do, because no one else would do it. I don't charge per session. It's free for the whole 365 for a full year. Man, you can keep sitting down and working on your portfolio. All right. But in that process, we can look at your relationship with money. I can start to see, okay, this person grew up in a place where money was very difficult. So their psychosis, money is hard. People grow up with money is hard to achieve, believe they have to work very hard. People work very hard a lot when it comes to trading, have a tendency to start to overtrade, have a tendency to have confidence boosters. Some people have different relationships with money. I will get to learn this through our one-on-one sessions, right? Or over time. But understand this. Your first book of the month is called Disciplined Trader by Mark Douglas. 1 chapter a day. That's all I'm asking for. It's about an 18-20 chapter book. It will be done by the 20-something of September. You'll have achieved reading a book from cover to cover, which is so important for your brain. But it is what's important is what's inside that book. The second book of the month for the month of October is called Trading in the Zone by Mark Douglas. I am a big Mark Douglas fan. I read his book at least once every financial quarter for the last 3 years. I can quote it now because what that man says is so relevant to your journey. If I'm your mentor, education is going to become a very important thing to you. The Forex education. Right? Real financial education. Some of you need help with budgeting. Some of you need to be told that if you become profitable, the first thing you don't buy is you don't buy a car. You go settle all your debt. Right? You see, it's simple stuff. We'll talk through it, right, guys? But anyways, I thank you so much for your time. Thank you for joining me. Please, when you send me the TradeView link, Nyasha, I've got your email, not a problem. I'll do that. Okay, so I've got 2 people to send the TradeView link. Not a problem, I'll do that. Guys, thank you so much. This is my goodbye. I hope you guys enjoyed our introductory lecture. I just want to quickly save this email address before I lose it. All right, fundamentally, I didn't do much teaching tonight. I'm just introducing a couple of concepts to you. Tomorrow's class again will start at 6:30 and we'll end at 8:30. We stopped 15 minutes early today. We're supposed to stop an hour early, right? But yeah, if you're new, this is how I am. This is how I teach. If you haven't registered, you have all the time in the world to make up your mind about joining us, because this is just how I am. It's going to be a long 8 weeks. I will be building and building rules upon rules, and we start tomorrow. All right, guys, thank you so much. I'm going to end the meeting. Unless if there are any questions, please feel free to ask me now. Any questions? Any administrative questions, trading questions? No questions. Fantastic, Alvin. Nice to meet you too, buddy. And honestly, a pleasure, my guy. Honestly, a pleasure. Right, everyone, thank you. For those of you who are joining us, I'll send the link out. Remember, early bird registration ends on the 9th. After the 9th, there's nothing I can do. All right, so either you join by the 9th or you join before the 13th, but from the 10th, 11th to the 13th, you're gonna have to pay the full fees, because the admin staff wanna go, and I understand that, right? It's just a short intake that we're doing. All right, but otherwise, see you guys tomorrow, right? Same drill. Registered students, I will send you a link to the private Telegram group. So please don't you worry about that, right? 365, shake my head. Thank you guys. Good night. Good night, everybody.
Good night too.